Don't do it, guys. Don't place trades based on what you see here. Please consult your own financial advisors and do your own due diligence. All right, with that said, let's go. It is September 29th, Saturday, and today we're going to be talking about the dollar. Before we get into it, let me just put this on scene. All right, because we're going to be drawing a little bit. So, first of all, um, still happy about this Friday yesterday and scoring this all-time high. I'm at now $36,415. Really good week after that questionable midweek performance. It's a great pop here and then an all-time high. So I haven't thought of any new trade ideas, and I know I said that I would be working on that mentally, but I haven't come up with anything. But what I did want to discuss is something that I thought about regarding the dollar and you know all this macroeconomic flow of capital that's going on right now around the world. And what I came up with is two things. One, that the dollar really wants to come down, and what I mean by that is, there's inflation, so the products are priced in higher amounts. People are making, people have a lot of money in the market, earnings are good, so there's a lot of money floating around, like from dividends, capital gains. Um, there's more currency now than there's ever been out there. So the dollar wants to go down relative to real things, and it already has relative to the stock market, for example. So the stock market is up, so by definition, the dollar is down relative to the stock market because that's what the stock market is measured in. It's measured in dollars. Now, so the dollar really wants to come down relative to real goods. I'm already starting to see it. There's a lot of inflation, especially where I live, but in the international arena, the dollar isn't going down. It's only going down to us locally versus real things, things that we're purchasing, right? So the US dollar, oh, oh, look at that, writing tool, wrong color. So the US dollar wants to go down locally here, but on the international arena, it's actually catching up a bit, okay? So locally and internationally, and now let's go like this. And now why is this happening? Because the foreign currencies are going down, right? So because, you know, whatever kind of foreign currency that you wanna pick, maybe you want Australian dollar. Okay, so these are all going down, and whenever something's going down, they price it in um, American dollars because that's the world's reserve currency, so it bids up. I don't know what the lira is. Is it like this? I have no idea. But anyways, especially like Turkey, Brazil, and South America, and all these currencies, they're all going down because the problems abroad seem to be worse than the problems locally here in the U.S. So in the international arena, like the dollar's catching a huge bit, and it has this interesting effect now that we're having a strong dollar environment where the dollar should really be moving down locally. And uh, it's hard to figure out a few things, right? One, how long it's going to be happening. It could happen for a long time. In the 90s and especially late 90s, there was a lot of um, hyperinflation out there around the world, and the same scenario played out where the dollar was really strong. I know for a fact because I came from one of those countries that had a hyperinflation in the 90s, and um, the dollar was very, very strong. It was even very strong against gold, something that's happening today as well. Dollar strong against gold. And I looked at other currencies. Gold is very strong in the other currencies, but against dollar it isn't. So the dollar's catching the number one bid and gold second. So it's very strong against gold. It's very strong against foreign currencies, and the stock market in the U.S., if you remember, was going up at the time towards that dot-com bubble. Now we've already had a couple bubbles on the way. Um, Actually, more like three little bubbles on the way to the current stock market valuations. We've had the 3D printer bubbles, if you guys remember that. We had the cryptocurrency bubble, all right, and now we had a mini weed bubble, and now we're having a second weed bubble or pot, whatever, marijuana bubbles. This is the second one now. Um, we're having a lot of bubbles on the way up, and I don't see that slowing down. So it's the same thing. It's like these bubbles are replacing the dot-com bubble back in 2001. So we have strong dollar, strong US market, um, gold's, let's just say neutral, and then weak international everything. A lot of the international markets are also down. They're traveling kind of with their currencies. Currencies are even more so down than the international markets. And so what we saw is as soon as the US, what we saw in 2001, right? It's as soon as the US showed cracks, this whole thing reversed, right? This whole situation reversed. And so we went from strong US dollar, right? Strong US dollar to the weak US dollar and strong everything else. All these, currencies and gold and everything between 2001, 2007, and 8. 2000, let's just say it's 2007. There was a lot of gains to be made internationally, right? A ton of gains, as well as oil and all the commodities and everything else. So this may be a similar scenario setting up over here because the conditions, right, that were there during that time period are the conditions that are present right now. So it's not crazy to think that a similar dynamic is going to play out, which is much different than the dynamic that played out in 2008. So this is more like the 2000 and 1999, 2000, 2001 situation where we're at right now, rather than 2008. So, um, well, there are some differences. Yeah, so like for example, we have much larger deficits right now. Um, both domestic and trade deficits. So I don't know how that's going to play out. I don't know what the consequences of that is. There's a lot more money out there, a lot more credit, a lot more debt. Um, so I don't know what the consequence of that is. I don't know if that's going to have a positive or a negative effect on the dollar if things show cracks. But as of right now, at least perceived in the news and the investor's mind, regular, the average investor, even professional investor, not just retail investors, there are no cracks. There are no cracks in the economy. And but another thing that happened in 2001 that's just like now is that we were in a rising rates environment, which is akin to what is going on right now. So you can see the resemblances. I mean, they're huge. They're huge. It's very much a very similar scenario. So it's going to be interesting if something like what played out in the early, in the 2000s is going to play out now in the 2020s, or at least starting here, 2018 or 19. But as of right now, it's not showing any cracks. So I would probably compare this year today to like 1999. So I don't know if there's going to be another year or two of this bull run, and there might be because oil hasn't really heated up to an extent where it's going to cause huge problems. Um, there's already a lot of problems internationally, as you can see. A few countries are folding um, on themselves because of the strong dollar and the oil prices and everything else. But oil is rising in dollars. Imagine what it's like in the foreign currencies. We're not feeling it as much because our currency is strong internationally, the US currency, and so we're not feeling it as much. But people with weak currencies are really feeling this. Their consumer goods are skyrocketing through the roof because transportation is factored into the cost, and oil is part of transportation, so that needs to get factored in on top of everything else, and it just really bids up the price, puts a lot of pressure to the consumer, and you can see that how that can cause problems, and there's going to be cracks in their economies. And not to mention all the other negative effects that I've mentioned about the stronger dollar and debt, which foreign country corporations, companies are they get funding in US dollars for many reasons. Um, Stability, etc., plus availability, etc. And so what happens is for them to service the debt becomes much, much more expensive, and then their valuations shrink because of that. If they had profits, they're now smaller profits, and if they had losses, the losses are now deeper. So you can see how that would put pressure on their stock markets as well, on their companies. So currency's down, their company's down, and it's exactly what we're seeing. It's playing out in front of our eyes. So we know the current conditions very well. The only question is, how long is it going to last? All right. And two, um, again, it's another time question. It's when are we going to see cracks in the U.S. economy? When is this international failure, let's call it failure for right now, when is it going to affect um, the big question mark in the room or the big question mark in the globe, which is the U.S. economy, right? Do we just look strong? Are we just flexing? Or are we actually strong, right? Have we pumped our muscles with um, silicone or whatever just to just to look buff, or are we actually strong? So no one, we haven't been called out yet. No one's called us out. So we'll see. We'll see if we can actually prove to be a strong economy. I don't know. Could be a facade, but earnings keep growing. Our biggest companies keep collecting capital, and it's hard to tell whether that's due to the fact that there's a lot more money out there right now, or that we're sucking up inter, you know, international demand and domestic demand, and um, it's very difficult to say. But nevertheless, that was my inner thought conversation today, and I came to these kind of conclusions that we're a similar situation as 2000, and there could be trouble in the horizon in the form of a stock market crash, but I don't, I'm not predicting it. It may not happen. It may something usually something crazy happens, right? It's something that it's not hasn't really happened before. It's got to be a rhyme of something that's happened in history and not exactly the same, right? So it's going to be something that hits us from left field, something unexpected. It's not going to be just a straightforward crash a la 2008 or 2001 where, the dollar gets a big spike, and then things unfold like they have gradual market increase again and recovery. So we don't really know what's going to happen, and I don't know either. So the best thing we can do is play with current market conditions and make sure that we're able to withstand a blow no matter where it hits us from. So that's a lot of thoughts, maybe a little bit of rambling, but I hope it gives you guys a chance to see where my mind is and what my thoughts are at and what my macro perspective is at and what I think is happening to the capital flows out there and all this money that's slushing around and what directions it's slushing in. So if you have any comments or if you've been thinking about the same thing, let me know about it. I'd be interested to hear what you see, not hear, to read what you guys have to say about it. Or if you have any questions, like where I get this information, where I get this knowledge, how to come to my thinking, anything that you want to know, just ask me. I'm all down. I can even make a video about it, or I'll just answer your comments. Yeah, start a discussion. All right. With that said, I think we're done here. I think we're done. I'll see you guys tomorrow. Peace out.